Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, September 22nd, 2008. Well, the markets came in today, and we're going to look at the keys to this pullback in the markets, which was pretty dramatic in all fairness, as the Dow tumbled about 373 points, or 3.27%. The Nasdaq was lower by 95 points, or 4.17%, and the S&P was down about 48 points, or 3.28%. Now, the keys here in this market, guys, before we get into the hardcore technical side of things, is that you have to look at what happened last week and the effects that it's going to leave the market with. Now, after the two-day major move on Thursday and Friday that we had called for, the turn date was on Friday. We went on Friday's video into a more of a pause to a pullback standpoint. And it means, what that means basically is you're expecting the market to consolidate before continuing to the upside. Now, today's market pullback was a little more dramatic than what we were thinking. We honestly wanted to see the gap fill, and I'm going to show you gap fill on the charts today. That's what we saw today, which is what we wanted to see, but we would have liked to have seen it happen over 2 days instead of one. Now, what does that mean going forward? Well, it doesn't mean a whole lot of beans. It doesn't mean a hill of beans until we see what tomorrow's action is. We're still giving the market the benefit of the doubt here in anticipation of another move up following this pullback. All right, so that's our stance right now, is that we'd actually like to see another day of consolidation or so, but at the same time, you already got such a sizable pullback, you don't necessarily want another big pullback. You more want the pause day or a future advance here or another push up. Okay, so while we watch this market, we did talk about, again, as I want to reiterate, the market pulling back this week as a good possibility, and it seems like as of now it's happening, although a little more dramatic initially than we hoped for. All right, so let's go into the charts. What did we see today? Well, originally the market last night, futures-wise, and this morning was down quite a bit. What you see here is actually the market trading lower by about 10 points on the futures to 12 points. It was actually lower overnight. Right now we're looking at 4 o'clock, 5 o'clock, 6 o'clock in the morning, New York time, Eastern time. And what we did see was the market starting to rally up into the open. And really right away, you got up to the open, the markets were flat, and that was as high as we were all day. Initially from that open, which is right here, 9:30 a.m. Eastern time, we started to sell off. At first, a little on the heavy side, but then we kind of paused, retraced, and notice how the market pulled back strong and then retraced its way back into the moving averages here. And you can see the 20, the 50, and the 200 all together. And where did that market retrace? Right into those. One of the best plays out there for day traders, swing traders, or investors is looking to either short into resistance levels of moving averages, especially a clump of them, or buy into it if it comes down into that level. In this case, it was the shorting opportunity right into those levels, right around that 10:30 time frame, and then off to the races we went down again. Same thing again happened. You had consolidated, which was a slight move sideways to up, right into a key moving average. At this point, the 20 sold again. At this point, you're basically forming a support line. Notice the support line here. From this point to all the way over here as you keep on hitting it and bouncing off. Now, you know at some point as you kind of create that triangle type pattern between the 20 moving average and the support line, at some point it's going to break one way or the other. All right, in tune with that, you came up to the 20 again. You just weren't getting through the 20. You closed above it, then you didn't basically what we call confirm the move, which is you have to move higher than the closing price. All right, so we didn't move higher in the next candle. We went below. Next candle, we went up again, but you didn't move higher. Here on the next candle, you had to move above that level. You didn't do it again. At that point, the market could not hold anymore and started to sell off. And really, this was the sharpest sell-off of the day into the close, where you really got hammered here into the close. Again, mentioning the Dow was down over 300 points. Quite a substantial drop on the day, almost 400, and the Nasdaq was down about 94. Now, what was going on today? Because we all know the reasons out there, what's been going on. We thought the bailout, everyone thought the bailout was done. Well, it's pretty much done, but the question is, and this is the keys, guys, that we want to talk about today, is it's not as simple as it is. You can't just infuse almost $1 trillion into the market, especially taxpayer money, and expect everything to be hunky-dory. I mean, there's a dilution effect to the dollar that's number one. You're basically increasing our national debt by 10% in a split second. That's huge. I mean, it's almost aggravating to those of us out there to see that happen, because you all know, I mean, we're on the hook for this debt. I mean, this is you can divide it up amongst everyone, and you owe a certain percentage of that debt. You're part of the country. Now, I don't want to get into that side of it as much as what happened here, because the dollar got crushed today. The UUP, which is what we use in the dollar index here, got absolutely destroyed today. You can see the drop here. It was as low as this point, closing right here between the 200 and the 50 moving average. Just ultimately decimated on the dollar side of things. Now, what did that cause? Well, it caused oil to rally. Oil had its biggest up day ever out there, folks, rallying almost $16, upwards of about $120+ today. Unbelievable move in oil. Now, here's the question, guys. You guys have been following our videos. Those of you that have been following for about 2.5 weeks or so, 2 weeks, know that this was our top on the dollar. We had calculated this out to be a very significant resistance point on the dollar, and look at how beautiful that was. In tune with that, we talked about in that video, and you can go back about two weeks in videos to find that. Just calculate it back 1, 2, 3, 4, 5, 6, 7, 8, probably about 8 to 10 videos ago when we talked about that. And in tune with that, we had talked about gold needing a rally, and gold was sitting right here at that point, and you can see the GLD having gained a huge amount, and the USO, which was also needing a rally. This lagged a little more than the dollar, right, because of the negative feeling towards oil, but ultimately it's getting that bounce, and a huge day on the USO today, up about $5. So it's all in relation to the dollar right now, guys, because of what's going on out there. People really haven't been thinking as much about, the economy aside from the bailout, how it's supposed to help, but it's just been crushing the dollar, and with that comes, unfortunately, commodity inflation and everything inflation. So it's almost unbelievable how it's working now. You have just a week ago, before the bailout, the thought of the dollar getting stronger and stronger, and the dollar had been rallying, and you even thought we even think there's deflation in the future because of the dilution, the vanishing of assets. But all of a sudden, the governments come in and say, all right, we're going to take over this asset, it's not going to vanish, and you begin to worry about inflation again and so forth as the dollar crashes or comes down, and oil rallies and gold rallies and commodities rally. Potash, POT, it's an ag stock. They rally when obviously inflation rears its ugly head, and you can see here the chart of POT having a nice move. Now, this is right into resistance, so we have to watch that. And there's one thing I'm going to say here, folks, is that at this stage we are neutral to negative on the dollar continuing to get weakened. What do I mean by that? Well, the dollar, let's go back to the UUP chart. We think the dollar is beginning to look for a bounce in this area. All right, the dollar is going to begin to get a little traction down here, at least due for a near-term bounce. It could see the lows here again, but at some point, and you can just note the gap fill. You had gap fill here on the chart as well, which is right in tune with the 200 moving average. You're going to start to see the dollar bounce a little bit. Now, is it a near-term bounce, long-term bounce? That's up for debate, and we'll reanalyze the charts, but it looks to us like the dollar is beginning to reach an area where it should bounce back higher. In tune with that, the USO, it's very possible the USO could see as high as this point would be resistance 1, and worst case, you're going to look for a move upwards of here on the USO. Let me remove this other line. But at some point here, you're already at a key resistance area. Notice the gap window resistance point here on the USO. Let me erase that again so we can really view it here. Alright, let's get that away. Draw that in. There we go. So you can see how you hit this resistance point, you pulled back. Could it go as high as here? Yeah, but that would probably be the extent before you have a pullback on oil as well. Oil closing at $120+ today. It's a big move, folks. And we talk about monster moves, whether it's in the markets like Thursday and Friday needing a pullback, and we got the pullback today, or is it in a commodity like gold or oil where it pushes up like that and has to pull back a little, consolidate before another move higher. So again, keep that in mind, folks, as we continue in, that you may see that pullback, or you may see a little bit of a bounce on the dollar, and in tune with that, you could see a possible pullback in gold and oil and the commodities off of this monster move. If there is a little more upside in it, it's really negligible here in our view, as you could go somewhere in this level to the upper end of right here, this gap fill area. Alright, now the key here, folks, is, again, you saw the NASDAQ getting slaughtered today. I think that demand issue is really affecting the markets as all these products and technologies are becoming less and less in demand because of people cutting back spending. That's one thing to look at. The whole craziness of the short sales, not allowing shorts in financials anymore, it's screwing up the SKF and UYG and all those trades, so you almost just want to ignore them. It's too risky, in our opinion, to even be dealing with that kind of stuff when you have these regulations out there that basically make a market not a market anymore. So, you do your best to trade it. That's what we do in the chat room, and we hope you all come. We also have the emerging new website, which will launch midweek, it looks like, Wednesday or Thursday, and we do hope you will come and follow us over there. The videos will be on there. We actually have teaching videos that we're going to post every month called Technical Tactic, where we teach a specific technical tool every month. There'll be lots of stuff. You guys can check it out. It's a lot of fun. There'll be a lot of tools on there to use. All right. So again, folks, just be a little careful here. Today, I just want to reiterate before we end the video is that the key here on the SPY, and you can show it, you actually had gap fill right here. All right, so you filled that gap. You actually closed a little bit below it. You even tested this area of support right here on the SPY. Again, we did expect a pullback into this week. We talked about that in Friday's video. Would we have liked to have seen a 2 or 3 day pullback equaling the loss of today? Yes, that would have been the ideal situation, but it doesn't always do that in this volatile market. Remember what kind of market we're in. We're one of the most volatile markets that we've ever seen, and you have to anticipate these. So still we'll give the market the benefit of the doubt. We're going to look for more consolidation and then a move up.